Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, July 11th. Firstly to the S&P 500 on the daily charts, and here we see the trend continuing to the upside. The previous day's trading we had a very solid build of momentum, very large white body candle taking out three important areas of resistance. Firstly the 2100 round number. The next previous swing high around the 2114 level, 2119 and 2125. Today the market has taken out the all-time high at 2134, establishing a new high here, a new major high at 2143. We have seen some loss of commitment as the market tested up to that level. But importantly, we have closed above that previous high at 2134, closing at 2137 for today's trading. Now, as mentioned, however, we have seen a day where the buyers have lost the control that they had from the previous day's trading. And this does raise doubt about the ability of the market to continue trading to higher levels. Also, formation of a smaller white body candle does suggest that there is potential for a change of trend because of the loss of momentum that was built on the previous day's trading. Now, as always, confirmation of a change of trend would be required. So watching the low here very carefully, 2131 for a lower high and lower low, but still with the market trading above a major high. This still is a fairly good close above this level. We haven't seen the sellers take control, so the story here isn't about the sellers being in control and taking over from the buyers here. It's about a momentary loss of commitment and control of the buyers. So what we need to do here really is assume that the trend will remain in force until we have evidence otherwise. That's a basic tenet of technical analysis, and our otherwise evidence would be a candle with a lower high and lower low. So looking for a potential lower high and lower low to confirm a downtrend if it does occur. But also watching the high 2143 for any continued bullish activity above that region. In terms of Ichimoku, a strong bull market in all three time frames, now fairly solidly supported by the Chica span, suggesting there is good potential for the market to continue trading higher. If we look at both the Kijun-sen and the Tenkan-sen, and especially the Tenkan-sen, it is pointing up very sharply, reflecting strong upside momentum. And even looking here at the end of the Ichimoku cloud, this also reflects solid upside momentum, so a very good move from the buyers here. If we do see any change of trend to the downside, we could see support coming in at any of these areas of previous resistance, down to about the 2114 area, and importantly down around the 2100 area if we do see a couple of days selling. Now, just using the Fibonacci extension technique, and here we're examining the relationship of the current first time frame uptrend to the immediate previous first time frame uptrend. And we had seen previously the market finding some resistance around the 50% level. That was on a solid build of momentum. There was every likelihood we were going to see the market trade higher. We have almost tested to the 61.8% level, and that is an area that we still do need to continue watching for tomorrow's activity. 2146 is where that trades, and that's about 3 points higher than where the market's trading at the moment. The next level above there is the 78.6 at 2166, and then the 100% level up around the 2191 area. Next to the Dow 30, and the Dow 30 is trading at higher levels today, not making new highs as the S&P has, but importantly trading through some important resistance. Firstly, the top of that highlighting the low zone around the 18,000 level, and then through another zone that extends from 18,100 up to about 18,200. And we have tested just to the 18288 region. We have seen the same loss of commitment as we saw with the S&P, and a loss of control, so there is some doubt about continuation, but we do just need to monitor how the market reacts to the highs and lows of this current candle over the next day. The various asset class ETFs, and firstly to TLT 20 plus year Treasury Bond Fund. And here we see a change of trend today, a candle forming a lower high and lower low, sellers in control. So obviously we may not be seeing an allocation of capital to the bonds from the equity space, and certainly the relative strength chart here is reflecting that, with it starting to trend lower and down below the bands, and momentum has been coming for some time. So certainly suggesting that we have seen the equities market stronger and the bonds underperforming. Next, with the gold ETF as well, there was promise for a trend higher over the previous day with the buyers taking control, but today we've seen the sellers close with control, and relative strength of a trend is moving lower, as has been its momentum, suggesting an underperformance against the equities market. So suggesting that the equities market certainly is a stronger market here in terms of asset classes. And just looking at the Russell Microcap Index ETF and comparing that to the S&P 500, which obviously represents higher cap stocks, the S&P versus the microcap, which is obviously the smaller stocks. And this is where we're seeing the strongest recovery here. Trend performance moving higher versus the S&P, and momentum of that trend moving higher and trading through the upper band, suggesting that the microcap stocks certainly are outperforming the S&P 500 broader and higher cap stocks. Also the tech stocks, the Nasdaq 100 or the Nasdaq QQQ index ETF is trending higher, is improving quite rapidly here, with the trend of the performance versus the SPY ETF moving higher. The momentum is reflecting that strength here and is suggesting that technology stocks in the Nasdaq equity in the Nasdaq index are outperforming the S&P 500 stocks. And the Dow 30 stocks represented by DIA, the ETF here. If we look at the relative performance versus the S&P, this is underperforming. So that narrow index stocks that the Dow 30 represents is strongly underperforming a slightly broader and slightly by 500 stocks versus 30 stocks, a broader index in the S&P 500. Next to our sectors, and the utility sector, which has been something of a benchmark for us in recent times, and it has seen the buyers take control, but we haven't seen strong follow-through following that bullish activity from the previous day's trading. But relative strength comparative is moving lower, as is its momentum, and it certainly does suggest that we're not seeing a strong flow of capital into the utility sector as a safe haven. Also, the consumer staple sector, which is something of a defensive sector as well, has seen the market continue to trend higher, but on a doji candle, suggesting some indecision. But if we look at the relative performance versus the S&P, the overall equities market and its momentum moving lower, suggesting an underperformance. And just using the program called Optima, which is by the market analyst people, and using the relative rotation graphs here. And this is very similar to the studies that we do with relative strength versus the SPY ETF, with the relative strength on the x-axis and momentum on the y-axis. And we can actually watch the sectors flow through in a cyclical manner through strength and lack of strength, for want of a better word, moving into leading quadrants, weakening quadrants, then lagging, and then improving quadrants. And at the moment, if we look at XLU, it has moved lower. Relative strength was strong, but we are seeing XLU, the utilities sector ETF, moving lower towards a weakening quadrant here, as we are seeing XLP, the consumer discretionary sector ETF, moving lower as well. And also back to our asset classes that we were looking at previously on the same basis, and here we can see how TLT, the 20+ year Treasury Bond Fund, and the gold ETF had flowed up into that improving sector, improving quadrant, and then up into the leading quadrant when they were outperforming the SPY ETF representing the equities market. Then we saw it flatten out and then start to roll over, just a little bit of an increase, and then rolling over once again, reflecting that they are perhaps moving down into an underperforming mode here. But this is all about the allocation of capital amongst the asset classes, and here at the moment we're not seeing capital being allocated to gold or bonds as an asset class, and a flow of capital away from equities into those asset classes.